top business stories live from the Sky News City studio. Sky News understands the Chancellor will cut national insurance by a further 2 percentage points tomorrow. All change in the office. Co-working and office rental specialist IWG reports record sales. I'll be speaking with the CEO, Mark Dixon. And I'll be speaking to the chief executive of the UK-listed company opening a new silver and zinc mine in Bosnia. Good afternoon, this is Business Live with me, Ian King. It's budget day tomorrow, the last budget before the likely general election. Businesses have plenty of demands to help ease the economy. But for now, the focus is what the Chancellor will do for individual taxpayers and how much he can afford to give away. As Sky News understands, Jeremy Hunt will deliver a further 2 percentage point cut to national insurance. Here's our economics editor, Ed Conway.
It's the budget. And what does that mean? It means we're going to have lots of figures, lots of data. We're going to guide you through it all, though, including some important data. This is gross domestic product, the rate at which the economy is growing. These are the forecasts last time around. They'll probably have to be downgraded a little bit in the short run because, why? Well, we're in recession right now, but they might be upgraded off into the future. I'm afraid that's not necessarily because the economy is doing brilliantly right now. It's because you've got really strong population growth, mainly because of immigration, which pushes those bars up. Another chart that's worth just focusing on, this is the tax burden, as some people call it, the amount of taxes we have as a percentage of GDP going all the way back many decades. And if you look at that line, that's the latest projection, you can see it's getting up to the highest level since the aftermath of World War II, an extraordinary statistic there. And the Chancellor says he wants to bring the tax burden down, but he says he's hemmed in by headroom, by the amount of headroom he has. And it's worth just focusing on what is this headroom everyone's going on about? Well, it largely comes back down to the fact that the Chancellor's got 3 fiscal rules, and the most binding of them is that he needs to get the national debt falling. This is their current projection for the national debt, and you can see it's not falling immediately. In fact, it's higher in a few years than it is at the start, but that's the key thing about the rule. The rule says you need to get it down falling between year 4 and year 5. And is that happening? Well, zoom in. Yes, just about. Down from 93.2% of GDP to 92.8% of GDP. And the gap between those two things, that's fiscal headroom. But if you take that bar and kind of work out what that is in cash terms, that's about £13 billion. So when the Chancellor's saying I've got this fiscal headroom to play with, it's because of that. But a couple of things to note. First of all, take the £13 billion. By historical standards, that's not an enormous amount of headroom versus the kind of rules that different chancellors have had. So there's that £13 billion. Sunak, Hammond, Osborne in the coalition, they tended to have more room to play with against their fiscal rules. But secondly, and broader point here, why is there so much focus on essentially what are forecasts? We're basing a lot of government policy on these lines here. This is the OBR forecasts over the years of national debt, and you can see they forecasts change a lot. They change an awful lot because, of course, the future is unpredictable. And if you look at the gap between the forecasts and what's actually happened, so take this, for instance, that average gap, the 5-year forecast horizon gap, going back the last few years, it's £415 billion. It's a staggering amount, raising the question, why are we basing so much decisions on investment, decisions on spending, decisions on tax on all of this? One of those questions we may have answered, along with many others, in the budget.
And tomorrow I'm going to be in Ipswich, speaking with business leaders before and after the budget. Do join me at 11:30 and 4:30 as usual. Some other business news for you now. And the telecoms equipment testing specialist Spirent has agreed to a takeover by US rival Viavi Solutions, valuing it at just over £1 billion. Spirent, a former FTSE 100 member, which was founded in 1936 and which was previously known as Bowthorpe until 2000, is a leading global provider of automated test and assurance solutions for networks, cybersecurity and positioning. Sir Bill Thomas, the Spirent chairman, said the company had been operating against an increasingly challenging market backdrop and that the takeover was a significant opportunity for employees, customers and other stakeholders. Travis Perkins said today it expects no momentum in the UK construction sector until after the general election, with its customers waiting to see if there's a post-election government stimulus package. The UK's biggest builders merchant was reporting an operating profit on an adjusted basis of £180 million for 2023, down 39% on 2022. Nick Roberts, the chief executive, said ongoing economic challenges had significantly impacted trading performance, driven by weakness in the new build housing and domestic repair, maintenance and improvement sectors. The shares are up around 1.5% right now. The bakery chain Greggs said today it was aiming to open up to 160 new outlets this year as part of an eventual target of 3,000 stores. The Newcastle-based company opened a record 220 new stores during 2023, but closed 75, taking it to a total of 2,473 at the end of last year. Well, Greggs was reporting a pre-tax profit of £188.3 million for 2023, up 27% on 2022. Sales were up by 20% to £1.8 billion. The shares have been up by as much as 3.5% today. And the publisher of the Daily Mirror, Daily Express and Daily Star has blamed a drop in annual sales and profits on Facebook's decision to refer less traffic to news sites. Reach, which with titles such as the Manchester Evening News is also the UK's biggest regional newspaper publisher, also blames lower print and advertising revenues. Full-year pre-tax profits fell by 45% to £36.7 million. Well, another company reporting today is the global co-working and office rental specialist IWG. It's reported record sales as employers continue to adapt to changing working patterns and the need to cut costs. IWG, which owns brands including Regus and Spaces, saw sales rise in 2023 to £3.3 billion. That was up 8% on 2022, while underlying earnings rose by 34% to £403 million. Well, joining me now, I'm pleased to say, is Mark Dixon. He's the founder and CEO of IWG. Mark, good to see you again this afternoon. Record sales, how much of that came from putting on extra space and how much from pricing?
That is the underlying performance. So it's extra space is driving the revenue, but the margins coming through basically pricing improvements, small pricing improvements, very tight control on costs. So, it's been a very inflationary year, 23, but we've managed to really work the supply chain to keep the costs pretty flat year on year.
Now, you've had a fair bit of churn in terms of space. You opened 328 centres, you closed 159. What are the sort of considerations that go into decisions like that?
Well, first of all, it's a global business. So we have basically 3,500 locations, and you have basically a 20-year life from a centre. So about 5% of them are going to close in any given year. So what you can see is slightly more than that in space terms. That's really the back end in 23 of the pandemic, with it just rolling out. So there's no more of that to come now.
OK. Now, you've been pretty clear you think hybrid working is here to stay. I just wonder what you've made of some of the recent comments from some of the big US banks who are obviously now trying to get people to come back to work in the office 5 days a week.
Well, this is a very nuanced sort of story. All companies are different, but the majority of companies are looking at hybrid as a way to reduce commuting of their workers. Technology's transformed the way people can work, and companies are adopting at a rapid rate. This is about a new way of operating companies. So the very banks that are talking about bringing people back to an office, it's not necessarily back to an office at the headquarters. That could be an office anywhere, and that is what we're providing. So, the offices are definitely here to stay, but they're just going to be in different places in the future.
I mean, obviously, you're a big global business. Do you see different patterns from country to country in terms of the extent to which hybrid working's been taken up?
Yes, we do. It's being taken up generally everywhere, but the out front sort of change agent is the United States, where US corporations are adopting sort of hybrid work at a much more rapid rate than most other places worldwide. That's followed by continental Europe and places like Japan. So it sort of comes down to the commutes in the end. What companies are doing is saying, look, we don't want to inconvenience workers by asking them to commute long distances to come to a workplace where all they're going to do is use a computer most of the time. They could do that close to where they live. And certainly that's the case in the US. But the US growth rate is, we're growing there at more than 50% each year. It's likely to be higher this year. And, that's really the place with the fastest change.
Now, there's a lot of discussion right now about UK companies moving their main stock market listing to New York. I mean, you're about to start reporting in dollars. Is a US listing the next logical move?
No, we're reporting in dollars simply because more than 60% of our business is denominated in dollars. So we've had problems with the volatility in sterling over the past years. And we want to have a more consistent reporting currency, and that's really what it's related to. We are effectively a US business today listed in the UK, with huge part of our business there. That's one. Two, we are considering a change to US GAAP because that provides a much clearer view of what's going on in the business compared to IFRS. A move of our listing is really low on the list of consideration, but it's one the board continues to consider. It's a deeper market. Growth companies like ours perhaps are better understood, but it's low on the consideration list. This is all about cash flow. We're a growth business and we can be listed anywhere.
Good stuff. Well, you don't look like you're surrounded by packing boxes right now, Mark. Good to talk to you this afternoon. Thank you.
Thank you very much indeed. Thank you.
Well, as concerns grow about China cornering the global market in minerals and metals, the EU has been trying to encourage domestic production of materials vital to Europe's future via the EU Critical Raw Materials Act. Well, today saw the UK-listed Adriatic Metals formally open the first new European metals mine since the legislation was proposed. The Vareš project in Bosnia and Herzegovina is aiming to produce around 90,000 tonnes of zinc and around 65,000 tonnes of silver-lead concentrate a year over the next 2 decades. Well, joining me now live from the Bosnian capital, Sarajevo, is Paul Cronin. He's Chief Executive of Adriatic Metals. Paul, welcome to you. What sort of demand are you seeing right now for silver and zinc?
Yeah, look, I think zinc demand is a little bit flat, as we've seen China pull back a bit in terms of its internal demand. But certainly with silver, we're seeing silver demand continue to grow year on year, and that demand is not just coming from the precious metals aspect of silver, but it's largely being driven by energy metals, where silver, obviously heavy usage in photovoltaic cells, but also, and what we're seeing an increasing amount of industrial usage for, is for high velocity electric vehicle charging.
Now, given the thrust of EU legislation currently, I assume all of your output will be going for the European market?
Yeah, look, our zinc certainly will be. That is destined for Benelux and Norway. With our silver concentrate, there's other metals in there, and quite often we find Chinese smelters will pay better for that mix of metals than what we see in some of the European smelters. But it'll depend on the supply demand at the time.
Now, you've gone from discovery to production in just 6 years, which is a remarkably short space of time by industry standards. How have you achieved that?
Look, I think with really good support from capital markets, number one. I think we've also had strong support from government here in Bosnia and from the international community, who plays a very active role in the country. It normally takes about 15 or 20 years to do what we've done, but I think with rock solid determination and a commitment to getting through some of those technical challenges and some of the global challenges that we've faced in the pandemic, in hyperinflation, etc., we've been quite successful in pulling this off in a relatively quick time frame.
And how much does it cost to get to this point?
About $250 million up until now. The majority of that is on the mine and the plant, but also we invested around $40 million in exploration, environmental studies, design work, etc., before we started construction.
And how long will it take for you to achieve payback on that? And what are the production costs like compared with some of your global peers?
So on a silver equivalent basis, we're probably one of, if not the lowest cost producer. The payback will be fairly rapid. With any underground mine, however, you've got to continue to develop accesses into your stopes where your payable minerals are. And that's what we'll be doing over the next 6 months, and we should hit nameplate capacity early in Q4 this year.
Now, this is a big deal for Bosnia. I know you had the Prime Minister there at the opening ceremony today. I mean, I think you count for something like 22% of foreign direct investment into the country.
We did in 2023. So it is a big investment. It's the biggest private investment in Bosnia since its independence over 30 years ago. It will have an impact on GDP. It will increase GDP by almost 2%. So it is a big deal here. But what it shows from a Bosnian perspective is that Bosnia is open to large-scale foreign investment. And I think more importantly, what it shows is it's worthy of it.
It's a nice, positive story, Paul. We do appreciate you joining us today on such a momentous day for you. Thank you.
Thank you very much.
Still to come here on Business Live, we'll have a look at how the markets have finished up this afternoon. Stay with us.
Lymphedema is when your lymph nodes and part of your body don't work properly, and so the lymph nodes move swelling around the body, and they can't do that, so the swelling gets stuck, and so the fluid gets stuck and causes swelling.
Okay, and what impact does it have on you, young man?
It's just like a normal day in the life now. Sometimes I can't walk properly, and sometimes my leg gets really tired easily.
You have it in both your legs and feet, don't you?
Yeah.
So tell me a bit more about the condition, Mum.
So as Mary Kate said, whenever the lymphatic system fails to work properly, the fluid that's transported around the body gets stuck in that area, causes extensive swelling, and in Mary Kate and Ben's case, it's in both legs and feet. And it can be really difficult to manage for them, but we've struggled on, and it's now just part of our normal day-to-day life, and we're trying to make sure that others know that there's help out there for it, and they can get on with things, and it can be a positive outcome.
It can get sore and it can get tired very easily. And my legs can feel heavy.
So we just have to put lots of extra measures in place to make sure that their legs are safe. They're at very high risk of infection because the skin's stretched and the immune system's compromised. But we can once we have the good support and put loads of measures in place, they can do everything else that everybody else does.
That's amazing.
And his friends are very supportive as well. And, you know, we're very lucky. We have a great lymphedema service back home that have provided amazing support, and we have great support from the Lymphedema Support Network and the British Lymphology Society. There are charities out there, and some people just don't even know that they exist. So we've utilised a lot of their help to help Mary Kate and Ben get to where we are now.
Fly Emirates. Fly better. Fly Emirates. Fly better.
Thank you.
Well, stocks in Europe have traded largely to the downside this afternoon. Here's the picture in mainland Europe. Fairly mixed, as you might say. The real top of the leaderboard with the yellow jerseys, the MIB in Milan this afternoon, up 0.75%. Talking points in mainland Europe today include the French defence contractor Thales, which is up 8.25% in Paris on better than expected results. Well, here in London, the FTSE 100 has been pretty mixed for most of the day. FTSE finishing very, very marginally higher there. The leading blue chip gainer in percentage terms, up the leader by some distance, is the Intertek, that's the testing and standards specialist, up by just over 6%. Its results have gone down well, while another company whose results have been well received is the Mexican gold and silver miner Fresnillo, up nearly 3.75%. There's a firmer gold price helping there as well, I think. To the downside, the plant hire and tool rental group Ashtead is the leading blue chip faller. It's got 9 monthly results out today. Outlook statement there has caused some concerns. It was down 8% at one point earlier today. Outside the FTSE, Spirent has surged 62% on that agreed takeover bid, while the Lloyds of London insurer Hiscox, a company that we've had on the programme in the recent past, up 5% after reporting record profits. And the flow control and instrumentation specialist Rotork has finished up nearly 3.75% after its full-year results beat expectations. To the downside, very busy day results-wise today. Inchcape, the international motor dealer, off by nearly 8.25% on a downbeat trading update. Over on Wall Street, the main indices have opened to the downside on news that US services sector growth cooled slightly in February. Apple has fallen by another 3% on news that its sales in China in the first 6 weeks of the year were down 24% year-on-year. To the upside, the retailer Target has risen by some 12%. That is on better than expected quarterly earnings. On the foreign exchange markets, sterling up by around 1/8% against the dollar and similarly against the euro. Single currency more or less unchanged right now against the greenback. As for the oil price, well, that has given back some of the gains that it notched up earlier in the session. Barrel of Brent crude will currently set you back $82.68 a barrel. That's off a little under 1/8%. Meanwhile, the price of Bitcoin has hit a record high this afternoon, $69,202. Well, joining me now is Fawaz Chowdhury. He is the head of equities at Fulcrum Asset Management. Fawaz, good to see you this afternoon. Let's start with Travis Perkins. Fairly gloomy set of results, really, but the share price, I think, finished higher.
Well, expectations have been gloomy on UK construction, and they actually did guide very conservatively as well. But I think there is an underbuild in UK for housing. House prices have only last month started picking up a bit. Construction activity should improve. And we see, generally speaking, PMIs, ISMs, manufacturing cyclicals coming back. Intertek reported well, Rotork reported well. So in league with that, I think expectations are really bearish going in. So hence,
And they have, of course, there's been a lot of self-help at Travis Perkins. They've closed a lot of their underachieving depots.
That's right. I mean, they've performed really well with that. They're sticking to their plan. Their capital allocation has been good, and they're waiting for the cycle to turn, so to speak. Yeah.
Now, you mentioned Intertek, one of the lesser-known companies in the FTSE 100, but nonetheless a very, very consistent performer.
Intertek is in the testing business, and it's one of the best return on capital compounders that has been there. If you look at the returns over the last 2 decades. And their margins fell off right at the end of the pandemic. Testing pulled back as the manufacturing cycle pulled back. But their margins have now fully recovered back to 2019 levels. And they should improve further from here. And they continue to be a mid-single-digit sales grower with some margin improvement. I find the company very high quality. on a secular basis, and with a cyclical kick coming in from the manufacturing PMIs, ISMs improving.
Yeah, it really is a quality business, that one. Now, Fresnio is another one that's updated the markets. People often mistakenly call the FTSE a sort of barometer of corporate Britain. I mean, this is a Mexican silver miner.
Well, US is doing, you mentioned China, US, Apple sales falling. US is doing a lot of reshoring into Mexico, and it is really pulling up the Mexican peso a lot. Fresnio is a Mexican miner, so costs are in peso, and it is feeling the brunt of the peso rallying because of the US reshoring, bringing a lot of business to Mexico, while it sells silver. It's the world's largest silver miner. So unfortunately, that pressure is not going to go away for them. And so I think some of the cost pressures they talked about today, stock is down as well. I think those pressures will not go away on a secular basis, medium to long term.
Yeah, I mean, is it one that a lot of UK institutions would necessarily hold, or is it one for the tracker funds, really?
Yeah. A lot of the listed gold and silver miners are in Canada, some in US, and then Australia. So to those European, UK funds who want to have exposure to gold, I know you have a new gold company coming in Bosnia as well, but hence they will have them in there.
Very good. Farmer's got to leave it there, I'm afraid. Good to see you this afternoon. Thank you, sir. Yeah. That's it from me. Don't forget, I'm back tomorrow. I'm going to be in Ipswich with lots of budget coverage. Do hope you can join me at both 11:30 and 4:30. See you then. Cheerio.
It's 5 o'clock. I'm Mark Austin. This is the News Hour. 60 minutes of news, analysis and interviews. We begin right now with the top stories this hour. Sky News understands the Chancellor is preparing to cut national insurance by a further 2p in tomorrow's budget. Talks over a ceasefire in Gaza stall as humanitarian groups say the aid being dropped is nowhere near enough. The Ministry of Defence provides the first hint of when the Princess of Wales might return to royal duties. Ukraine says it's hit a Russian warship in the Black Sea as France's President Macron urges Europe to do more to help Kyiv. And a Super Tuesday for Trump as he closes in on the Republican presidential nomination. Plus, one to look out for at 6:30. We'll be speaking to Patty Boyd about the letters behind rock's legendary love triangle. Good evening. The budget is always a guessing game, but tonight Sky News understands that the Chancellor will cut national insurance by a further 2p in the pound when he stands up in the Commons tomorrow. It would mean a saving of around £450 a year for someone earning the UK's average salary of £33,000. Today, Jeremy Hunt briefed the King about what's likely to be the last major set-piece fiscal event before the general election. Mr Hunt has been under pressure to cut taxes as the Conservatives continue to struggle in the polls. Let's bring in our Deputy Political Editor, Sam Coates. Sam, good evening. What do you know?
We know that Jeremy Hunt is perhaps going to give the budget he didn't want to give because he simply has less money than he thought he would. As you say, Mark, the Chancellor tomorrow is certain, I think we can say, to unveil a 2p cut in the headline rate of national insurance. That's exactly the same thing he did in the autumn statement last year, in the autumn. And that will mean that another £450 is taken off most people's tax bills. He will trumpet 900 quid of people's tax bills in total because of this second national insurance cut, which is likely to be rammed through the Commons at double quick speed next week, we understand, because they've just cleared a day